Hello, Brad here, just to say we're super proud that the Friday 5pm podcast is sponsored by the Malt Miller, the UK's best home brew store.
We use the Malt Miller for all of our homebrew experiments, as well as tapping them up for advice and binging on their awesome YouTube channel all the time.
That's why whenever we release a homebrew video, we put a recipe kit live on the Malt Miller, so you can brew with the exact same amazing ingredients that we did. The same ingredients used by pro brewers.
So alongside the Malt Miller's nitro-flushed hops, cold-stored yeast and milled-to-order malts, you can pick up recipe kits for our 5 Points Best Bitter, Russian River West Coast IPA, and now the fastest beer in the world, a hazy session IPA that goes from grain to glass in less than 48 hours.
Sign up to their newsletter at tinyurl.com/Malt Miller to get 5% off your first order. With the Malt Miller's amazing customer service and Johnny's 48-hour recipe, you could order the ingredients on a Monday and be drinking the beer by the weekend.
Speaking of which, it's Friday.
It's 5pm.
So enjoy this week's Friday 5pm podcast.
I love that stuff. Been drinking it for years. Drinking it for years. Drinking it for years. Drinking it for years. You know, I heard they recently decided to add more hops to it. Hops to it. You know, I heard they recently decided to add more hops to it. Hops to it.
Hello and welcome to episode 1 of The Bubble with me, Rob Young, and Johnny Garrett.
Hello there. Episode 1A, perhaps. We've done an introduction podcast, which if you missed, you can go back and listen to get the idea of what we'll be doing. But The Bubble is the podcast that makes you think differently about beer. And Rob and I certainly think differently about beer and, indeed, beer buying as a result of today's podcast. That was a sweet seg. So today we're chatting to a very interesting guy called John West, or rather, John is talking at us. About the process, the controversies, and indeed the benefits of selling out within a small industry like the craft beer one. Yeah,
it's obviously, it's always relevant in craft beer since big American breweries have been selling out, and then more so in recent years with UK guys falling by the wayside. So he just talks about the pros, the cons. It was actually really fascinating, particularly relevant at the moment because there's been a few guys who have sold out recently for different reasons. But it was a really refreshing and sort of surprising insight into why people do it.
Yeah, I think to give this a bit of context, so there's now breweries that are no longer independent in this country are numerous, more than you probably think of. So obviously you had sort of the first wave, which was Meantime and Camden. There's now Beavertown who sold an undisclosed stake. Lion have bought the entirety of 4Pure. There's a wine and spirits distributor, I think called Halewood, that's bought Hawkshead, and another Saddlewoods, a small real ale brewery in the southwest, I think.
Brixton have gone to
Heineken. Thornbridge are said to be up for sale. So there's loads and loads of what would be, I guess, termed market playing going on. Lots of companies in play. So John talks to us about how that process works, which was completely new to me. I guess in our classic naive craft beer way, we assume that people just meet over lunch and shake hands, which is very much not the way that it seems to happen.
Yeah, well, a lot of money is sort of changing hands, so I suppose our naivety got the better of us, and this is still serious business. And I think that's what I tend to forget. You know, when your little local brewery down the road sells out, you're nearly a bit hurt, but it is business at the end of the day. And the more you talk about it and the more you think about it and the more money that's changing hands, you start to realise that it is a passion project for all these guys, bar none, but passion and business can go hand in hand. And I mean, it's so relevant within the bubble because people get very hurt and they don't like these breweries and won't buy them anymore. And, you know, if that's you, that is fine. You have your reasons for doing that. But they also have their reasons for selling. Some do it because they want to sit in a big massive wad of cash, which is absolutely fine if that's what gets you going. But others do it because they need to grow and they need money, and you need one to do the other.
Yeah, and it was good to have John. So John West, who's a journalist in the financial world, also, as most journalists are, turned out to be quite into alcohol, specifically beer. So it's good to have, I guess, what was quite a cynical outlook on business. Well, not cynical, a very realist outlook on beer business. But also, you know, he's caught in the same two minds as we always are. When a brewery sells out, he's like, you know, hey, great, this means this beer will be more available, blah, 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 blah. But he's also one of the guys that, you know, probably is a little bit emotionally affected when his favourite small independent brewery becomes neither small nor independent. So tune into this, guys. It's a really interesting chat. It doesn't get too businessy, but it really did help us get our head around how these deals work, why these deals happen, and what the future's going to look like, because this isn't the end, it's barely the beginning. I think we've got over 20,000 breweries in the world. Not all of them can sell, but a fair whack of them probably will. So this is John West and our episode Sellouts. What would be great to establish first for people is who it is that we've brought in and what you do and who you work for.
Mm-hmm.
Who do you work for? Who do you work for? Get a light in your eye.
Yeah.
So if you want to tell us about that would be great.
So what do I do all day? My name is John West, and I'm a financial journalist. Sounds like an AA meeting or something.
Where was the last
the
time
last
you had a
episode
drink?
of this might be.
It's the best AA meeting I've ever been to. You can cut this all out in the edit.
Yeah.
So I'm a financial journalist. I work for a publication called Merger Market, which is primarily for investment bankers. So we're telling them about companies that are going to merge and trying to give them a heads up so they can get a mandate, so they can win the race to get some advisory fees for it. So that's how we operate. We've got about 150 journalists across Europe, and obviously we report quite a lot on the beverages industry and drink and beer in particular. And obviously, you know, we covered the AB InBev SABMiller merger and all the divestments out of that. You know, the Meantime, for example, which had to be sold out because the competition authorities didn't want them to have such a huge slice of the beer market. So it's been very busy. And obviously the kind of consolidation in the craft beer space hasn't gone unnoticed.
You said beer in particular. Is that because beer is very busy, or is that because there's a special interest for you or other people at the company?
Oh, we're passionate about beer. The statistics about journalists and their drinking habits are well known. But yeah, so we take a healthy interest. Our office is just by the Pelt Trader in Cannon Street.
Oh, yeah.
So we're regular. Shout out to Mark. But yeah, we regularly go over there to discuss it. But no, seriously, the reason it's such a compelling sort of segment at the moment is just that. Obviously, if you've looked at the drinking statistics in the UK, not that you'd guess it from the tabloid headlines, but we're drinking less, but we're drinking better. And so people are looking for opportunities to grow volume, but that's relatively limited. What you want to grow is the margin. Yeah. And premiumisation is so much different from the past. So 20 years ago, you'd have got away with a sexy person, man or woman, holding up a glass of Stella or Peroni and selling the brand. Now the beer has to actually match that branding, or whatever premium branding you've got, you need the beer quality to match it. And slowly but surely, the macro players are realising that if you want that kind of premiumisation, you need the product, and they're not able to develop that internally. So we're noticing quite a lot of interest. I mean, the Meantime deal, when SABMiller bought that was a real sort of milestone in that, because it was that big beer recognition in Europe, at least, that you needed to go to a niche player. Well, the mileage will vary on how good people think the Meantime beer is, but it was that kind of sense that big beer is watching the space.
Yeah. So what was the marketplace like sort of 10 years ago, certainly in the UK? Because go back 10 years, who's playing in the craft market? You've got Camden don't exist, Colonel don't exist, Beavertown are long from existence. So you've got Meantime, Brody's, who else? Not very many people.
No, I mean, you'd have big players in Belgium. You'd have Duvel and those guys, but in the UK...
It was non-existent. So how has that sort of changed your guys' perception on things? Were you just looking abroad for small breweries, the change in the market, or was it just not being looked at?
Well, if we go back 10 years... I started as a financial reporter way back in 2006, which was boom time, right? way before the crash.
A year before. It didn't last long before you were in
indeed.
crisis journalism mode.
I was trying to avoid the fact that the crisis started only a year after I began as a financial journalist.
Wasn't a coincidence, no. What have I done?
I know, right? But yeah, you're right. Northern Rock had to be bailed out in 2007. Then we had the collapse of Lehman Brothers in 2008. But in the run-up to that, during the boom time, there was all this talk about, beer was still seen very much as a commodity, the premiumisation of it as a genuine, tasty product. That was really only happening among people like us, drinkers who were beginning to sort of get to grips with what became known as the craft beer revolution. But in business terms, the focus on breweries and pub companies was getting rid of their brewing operations, focusing on becoming pub companies. Green King, there was talk about whether Green King would become a real estate investment trust, right? So, and a real estate investment trust is basically, it is what it sounds like. It's just a real estate business that throws off dividends off the back of its rents. So,
That's how McDonald's made its millions, isn't it?
Yeah, exactly, and sort of almost like a franchise-style model, and just taking the rents, and the brewing would be very much a sort of side operation. And of course, Green King is largely a pub company and not a brewing operation, but that was the way people were thinking. Then the crisis happened, and the real estate valuation of these pubs became very depressed. And that was when pub companies and brewers with large estates of pubs began to really look at how can we sell beer across. And you saw even more guest beers, and you began to see very, very slowly keg beer becoming premium. So you'd see a Meantime font in a Punch pub, for example. Once you've got seriously good quality beer from traditionally quite what would have been considered microbreweries into big distribution channels like major pubcos or the supermarkets, then obviously macro beer, the likes of Heineken, the likes of AB InBev, they don't want to see that premium margin being taken by a small player. They'd rather have it themselves, and that's why you get the likes of AB InBev buying Goose Island in the States and Camden here.
So let's rewind a little bit, and we'll get back to that point. What I think is really important for us to understand is how a merger might go ahead, or how an acquisition might go ahead. And once we understand that, we might hopefully get a clearer view of why you might want to be acquired, or why you might want to acquire. So when it comes to a big brewery, any company taking over a smaller company, what are the machinations in place, and how does that start to come about?
Well, let's roll back a sec to the question we were looking at earlier. What was the beer industry like 10 years ago? Let's go back a bit further, 20 years ago, when the likes of Green King were buying out Ruddles, say. Back then, they were just buying out breweries and taking the brand, but the quality of the beer mattered relatively little. So the bean counters could simply take the brand, take the pubs associated with the brand, rebrew the beer. Didn't really matter too much whether it was any good, but they had the brand, they had the badge they could slap on it. That's very different as we were talking about just now, right? So when a major brewer is buying these breweries now, they have to be seen at least to maintain the quality that kept that beer good in the first place. And I think that probably a very good example of that recently, less so perhaps Goose Island, indeed a book's just been written about that. But if you look at what's happened with Camden in London, I think that's a textbook example of a takeover that thus far has worked out pretty well for everyone involved. Obviously AB InBev have managed to get quite a high margin business. God only knows they paid for it. They paid roughly 215 times the operating profit of the company at the time, which is, by a factor of 100, ludicrous. But, that shows that they really wanted to have a great brand, and, Jasper Cubbage built a great brand. But, the beer hasn't hugely suffered. It's not very adventurous. It's not cutting edge, but the unfiltered lager is still as good as it ever was, and they've got their new brewery. What they get with that is the opportunity to go to pubs and bars and say, you don't need to go to the small brewery down the road. We can give you the full package. We'll give you your macro beer, your wines, your spirits, and your craft beer option. And so it's about being able to offer the full package, because if you can offer the full package, then you get the whole bar. And that's why Big Beer wants a slice of it. As for what's in it for the microbrewer, I mean, money. It's as simple as that. You know, if someone comes along offering you 215 years worth of profits for the company, I mean, how long are you going to live? Like, why wouldn't you take that money? And I think we forget as well that, you know, people creating businesses, they're doing so with a view to having an exit strategy, to having, you know, they may not be paying themselves for the first couple of years. Oftentimes, you know, most businesses fail in the first 12 months. There's no guarantees. And a lot of people will be setting up the business with a view to selling it on as their retirement. That's what they wanted to live on. So, you know, when you see a business that's set up as a passion, you know, you look at Evan with the Colonel. Touch wood, but I can't see that falling into sort of macro hands. But if you look at others where the brewery is held through a holding company, they've clearly taken the right advice about getting the right tax advantages for their profits, that sort of thing. You can go to Companies House and look up any brewery, right, on the UK Companies House repository of all the company information. Anything that's held via a whole company, they're thinking one day, okay, what if I wanted to sell? How could I jointly control?
Why does a holding company? Why is that an indicator of somebody who's looking for an exit?
It isn't necessarily. I want to be clear. It's not necessarily a symbol of that, because it could just be that they're wanting to take certain tax advantages about paying themselves in dividends rather than paying themselves in income. But it's kind of an indication that they've taken advice and that they're thinking seriously about it as a business, not just as a sort of passion proposition. And very often, the kind of people who would set it up as a business with a business plan would be thinking, you know, you build the company, you have a drive phase, you have investment phase, you have execution phase, and then there's exit. It's just the natural life cycle of a business. And, you know, with a small business and with the amount of capital that you can raise, either from banks or from investors or even from crowdfunding, though extraordinary amounts of money have been raised from crowdfunding, you know, there's a limit. And at the end of the day, if you want to really get access to big money and keep growing, you would need to put some equity on the table and sell either to private equity or to another beer company.
So there's now lots of different ways to raise that money. But so say you're Casper back, was it 2-3 years ago? You realise that what you want, or what you've always wanted, is an exit strategy.
Jasper
Cuppage.
Yeah.
And
not the friendly goose.
Not the friendly goose. That was Casper. So you've always had an exit strategy, and you're at that point. So you've done the growth phase, and you're starting to look at the next move. What happens? So has he already been shopped? You know, people have already come and they've come knocking. He's gone, not yet.
I think that's exactly how it is. And I think that, as much as we might disparage some of their beers, the macro beer industry are not fools. We write primarily for M&A advisors, and they constantly pitch deals to the buy side and the sell side. So, advisors will say, they'll call up a brewery owner and go for lunch with them and say, hey, I noticed you managed to raise the best part of £1 million via your crowdfunding. It's clear you're a serious business. I've noticed you got cans in Tesco or wherever. Let's be thinking about what the next phase of your growth is. Maybe you'd consider selling a minority stake to private equity like Brewdog have done, or maybe you consider fully selling out to a macro beer player like Camden have done. So there'll be pitches from banks going to those brewery owners, and similarly to potential buyers. I mean, there are financial sponsors, bankers. They're the bankers who have great relationships with private equity, and they will know that the private equity is looking, say, to invest in the brewery space, thinking about building up a brewery to be scalable and then sell on again.
So sorry, what you're saying is that actually the people instigating these conversations are probably neither of the brewers. It's possibly people who are looking to broker the deal, and they're doing the research, presenting it to the buyer or the seller.
Absolutely.
So that's never ever been mentioned in the history of sellouts in beer. The brokers of these deals are the people starting those conversations.
Not always. It could be that there was a trade fair where, the main guy from AB InBev sat, or the regional rep or whatever, the head of M&A makes a call, has a lunch with someone. I'm not saying there aren't those kind of informal contacts, but a lot of the work to get these deals over the line is done by bankers pitching their availability, pitching the idea, market making.
You can't imagine that these guys are going to ignore the hype. If they work in that trade, if you are part of one of these big brewing companies, these brands are not going unnoticed, because they're losing space to them, and that's why they want them, I assume.
Very often, exactly so, and very often you'll notice that there are sort of these brand reports which leak saying craft now accounts for whatever 10-12% of the beer market or whatever. Those brand reports are really quite expensive, or they're expensive to the likes of you and me. They're maybe £10,000 a pop. So, it's beyond the budgets of many craft breweries to be doing that. That research is often commissioned by the very biggest players looking for the trends under the hood and seeing what's going on, because they're so big, they're so far removed from it that they need those kind of Kantar Media often create these kind of reports. So that's how there's a whole industry around throwing up the ideas, and of course these reports then leak or they get shared by people, bankers read them.
We use them at Cave, yeah. Cheers, big guys.
And so those ideas go around, and there's a lot of market making that goes on with advisors. Yeah, sure.
And so you mentioned the book about Goose Island, written by Josh Knoll? Josh. Well, we'll flash up the name in the notes.
Drop that in, yeah.
And so it's an amazing book, and it tells the whole story of both how Goose Island came to be and how it sold out. It's called Barrel Aged Out and Selling Out. And in that, the story of Greg Hall and his dad John Hall, who founded it, the story is that they wanted to be an international brewery. It wasn't so much an exit strategy, although it was slightly for John Hall, because he was pushing 70. But the idea was they wanted national distribution. They find it incredibly hard in the 3-tier system in America. So do you think that's a legitimate thing that they've done there, or do you think money might have spoken a little bit bigger than the ambitions for the brewery?
If you have the opportunity to really set up your family, not just for life but for generations, who are you really to, why should they, to preserve the sanctity of Bourbon County, they're not going to, are you crazy? If you've got the opportunity to really look after your kids and your grandkids and your great-grandkids and build a legacy for them, and, go to your deathbed knowing that you can provide for your family, who among us wouldn't take the cash?
Is that why you think people, the drinkers, you and I, hate it so much, is because it bursts the bubble, pun intended?
Yeah.
But they think that it is this labour of love for them. People like Evan.
Like breaking the fourth wall and you go, oh, it was a business, I forgot.
So is it because we all assume everyone is like Evan at the Colonel? He is just doing it because he loves it?
I think so, yeah. And we
hate that. We hate finding out that actually this person is just slogging it out, working really hard, and they've got a payday, and good for them.
If Evan sold out, I'd do a full Reggie Perrin, I'd take off all my clothes and run into the sea. And that's a promise.
How much Evan would pay for that.
Evan, if you're listening.
Seriously though, I think that, yeah, absolutely. One of my favourite programmes is Inside Number 9, the guys behind Reece Shearsmith and Steve Pemberton, guys behind League of Gentlemen, and they did one recently about two faded comedians, and one of them was saying, it's not a business what we do, and the other says, it is a business, show business. And I think that we often feel like with beer, we're so into the passion of it, barrel aging, or wild yeast, or the passion that goes into it, or the flavours, or the all that stuff is so important, and it does matter. There's a reason why AB InBev paid 215 times the annual profits. It's because there's something intangible there. The actual the fermentation vessels and the brewery arch weren't worth that. What was worth that was the brand and the affection and...
Yeah, so I feel like we're getting onto a conversation, something that I learnt about only very recently while researching all of this, which is the idea of goodwill. in financial terms.
Yeah.
So can you tell us about that and tell us about how that probably played quite a part in how much Camden sold for?
Yeah, absolutely. I mean, this comes exactly what I was talking about. It's this idea of intangible value. So you couldn't say, well, that fermentation vessel, that's worth 100 grand. This one, the goodwill is the intangible assets. So, and often for beer, it's brand value, hype, the potential for it to grow, the love that people have for the beer and the brand. And so, in accounting terms, it's quite tricky because by nature it's quite subjective. But that's what it is.
I can't imagine accountants being very good or really liking this goodwill because it is so tangible. You can't.
But it depends whether the accountant is on the sell side or the buy side. If they're on the sell side,
loving it.
Yeah, you know what I mean. It's like how if he is the accountant is just the numbers guy. I'm not saying all accountants are just numbers guys, but if he is just the numbers guy and he gets brought this presentation for Camden Town Brewery and he's just told that it's got to be sold for this amount, it's just like you're having a laugh. Why? And it's just, is it a gut feeling? Is it...
No. I mean, you have to look at the business plan and see what the projected profits are, the projected growth, and also what multiples are being paid for other businesses in the sector. I mean, you know, if you're seeing other craft breweries, and at the time they were mostly pricing off American craft brewery takeouts because there hadn't been that many in the UK. But when you're pricing off that, you know, if they're going for 100 times, 150 times or 200 times profits, you can't pay less than that. And so that set the market rate.
So is there a formula?
It's not so much that there's a formula, no, because, you know, let's say Marks and Spencer, right? That doesn't trade anywhere, and that's a listed company, so you can see how it trades because its share price is there. That doesn't trade anywhere close to 200 times its profit. I don't know off the top of my head, but let's say it trades 8 times its profits, right? And that's what I'm saying about how ludicrously inflated craft beer is. But the point is that this is loose change for the big beer players. You know, Heineken, for example, which took a 49% stake in Lagunitas and then took a full, you know, its market capitalization is basically 50 billion euros. So that's 50,000 million euros. Its shares, to buy up all its shares, you'd need 50,000 million euros. So whether they invest 200 million here or 200 million there is completely irrelevant. It's a rounding error for them. It's huge for us. We talk about it all the time. Twitter rumours go around about different breweries. You know, there's lots of chatter among the bankers that I was talking about earlier about which deals are being pitched to whom. But at the end of the day, this is a rounding error for the big beer players. So they can get this opportunity to buy high premium, offer a full range of beers for their distribution network. So you can say, well, you can have, you know, Jupiler, Stella, and Camden Pale, right? And you can do that for a fraction of a, you know...
It's just about edging out the competition. You just want to have a complete portfolio. You want to appeal to the Joe Blogs down the road, and you want to appeal to someone who is got their craft beer hat on and thinks they're all that, and everything in between.
Yeah.
This is the reason why they're doing it. To go back to what you were saying about Brewdog and then being bought out by a private equity firm, was it from Seattle or somewhere in America? And then say
just a minority stake.
A minority stake. And then, well, that's another question, but and then an InBev buyout, sort of, apart from the obvious, one's a brewer, one's not, what is the advantages and disadvantages? Why would someone go for a private equity firm? Why would someone just go for InBev?
Well, I think the advantage of selling to private equity is that, I mean, the basic advantage is that private equity is a financial investor, right? They are not. So they will help you run your business. They will provide, I mean, you've seen like it's on a much smaller scale, but you see on Dragon's Den, right? They make a pitch saying, I'd like £100,000 for 1% of my company. And, you know, get very sweaty and then eventually...
slashes their dreams.
Exactly, right?
Or so, Deborah just eats them there and then on screen.
But let's say it's like a consumer goods company and Deborah Meaden says, well, I've got lots of experience, I can help you with your business plan, I've built companies like this before. On a much larger scale, that's the kind of expertise that private equity can bring. Because basically there's two types of private equity deal. There's those where they take mature or distressed assets, and then they do what's asset stripping, where they kind of sack loads of people, bring in management consultants, make loads of synergies or cuts, and try and really take it back to the bone and kind of flip it before it collapses, like sell it on again before it collapses. The other form of private equity investment is really genuinely the growth phase, where they're saying, we see huge potential for your business, but we can help you grow it, we can get you the scale, we can give you access to more capital to invest, to build another brewery if you need, more capacity. And so, but they're never going to interfere with the recipes, right? So you can retain a degree of creative control, I think, with private equity. And the risk, especially with selling 100%, I mean, they've left Jasper Cuppage in control, AB InBev, of Camden. And for my money, the Camden unfiltered lager, unfiltered Hells, is as good as it ever was. One day, when this cycle of beer enthusiasm is over, an accountant at AB InBev will decide they're paying a lot for their hops, aren't they, at Camden? Let's make sure we cut that a bit. Or, the malts, they pay a lot for their malt. That's a lot. Why don't they just use the malt that everyone else is using? Let's just make some cuts there. So the risk, I'm not saying that will happen, but the risk is always once you've sold out completely, and especially to a trade buyer, a fellow brewery, that they can always at some point make that decision about.
And AB InBev have fantastic form in doing that, like the Brazilian side of it, the AB. Is it the AB part or the InBev part? I can't remember now. But they bought breweries in South America, did the kind of the strip it back, make it simple, rescue these companies, grow them. So you feel like that's where they would take any purchase that they have at some point. They would look to increase the margin. And I feel like the reason, I mean, I'm not dead against sales of small breweries, but there is an element of putting a timestamp on your brewery, going, right, it's going to be good for this long. And then at some point, if Jasper walked away or if he handed over to somebody, then you don't know what's going to happen. Whereas with Evan, he's probably only going to put somebody in that he...
Well, this comes back to the Goose Island point that you made. I mean, as soon as they sold out, they were 100% employees of AB InBev. So, I mean, it does seem to me, as both a drinker and an analyst, let's say, of the circumstances, that the way things have been run in North America with Goose Island seems to be qualitatively different from how things have been run with Camden. But, I mean, just, as a drinker, and this is completely fair comment, I think Goose IPA, as it is now called, is nowhere near... It doesn't have the spritzy individuality that it had before. Is that my palate playing tricks on me, or is that because things have changed, or because my...
It's both, probably.
And the psychology of it is it comes back to what you were saying earlier. The magic has been taken away because now it's just a sort of corporate product. I do think there is a difference now versus, say, 10 or 20 years ago, where I think that big beer realises that the game has fundamentally changed, that you can... everybody wants to premiumise. That's the big thing, premiumisation. How do you get a better margin for a product when people are drinking less and therefore volumes are falling? And the only way to do that these days, you can't just have sexy Italian people in well-cut suits drinking the beer. You need the beer to match the quality that you're selling.
Can someone tell Peroni, because it's really starting to bug me?
I mean, Peroni is the obvious. I mean, I mean, I think that is a stunning achievement. The fact that you get bankers paying sort of £7 a pint for it in the city, and perhaps that is the exception, but it is the exception.
Well, they sort of copied the campaign from Stella, though, originally, because Stella back in the 90s did the reassuringly expensive, and then Peroni came along, and that was S.A.B. Miller's baby, and they did the same thing. They put it in a tall glass. It was a different style of glass than what we'd really seen before. They put some print on it with some sort of jazzy words, like inspiration and, I don't know, tasty, and then charged loads of money for it, and people just thought it was amazing. And then if you spoke to an Italian about it, they wouldn't be in.
They'd literally rather drink Tennent's. That's like the premium option.
I have drank super tea in Italy.
Yeah,
on draft.
it's that, and I think Tuborg are the premium. Where we see Stella and Peroni, they see Super Tennent's and Tuborg. I don't even know where Tuborg's from. I work in beer, and I'm still not sure. It's just at festivals and posh Italian restaurants.
So there's always a lot of numbers thrown around when buyouts happen, and percentages, and what percentage is being bought out. Obviously, if someone sells 50%, that's 50% of their business gone. If they sell 100%, that's 100% gone. But what's the relevance of the numbers? I mean...
there's like two watersheds. There's obviously the BA's definition at 25. Is there any logic to that? And then does 51%, if you retain 51%, does that make a difference?
I mean, in short, yes.
Mm-hmm.
There are different rules in different territories. So, for example, in Germany, certainly in listed companies, if you own 25% of a company, you have what's known as a blocking majority. Or a blocking stake. Sorry, not a blocking majority, that'd be crazy, 25%. But a blocking stake, which means that in Germany, if you're a listed company, you've got 25%, you can block certain major transactions, like mergers, like major issuance of capital, dilution of other shareholders. That all makes sense, right? Mm-hmm. Okay, good. With 25%, you can do something in certain jurisdictions. And across Europe, without boring you or pretending to be a lawyer, across Europe, there are different... in certain jurisdictions, there are slight differences. But by and large, if you sell a minority stake, you retain control if you've got the majority. And if you've got 51%, ultimately, if there's a board meeting... everyone goes round, carried, I've got 51%.
Yeah, you can literally block. So why do you think the BA picked 25% as their definition of craft? What could that have come from?
Well, I think that, once you've got a degree of input, once you've got 25%, you're likely to have joint ventures, or you're likely to have plugs into distribution channels of the major player. And... once that's the case, I think you've got to question whether your independence hasn't been diluted somewhat. But can't we all surely agree that the BA's definitions and thresholds are arbitrary and subject to change at all times? When Sam Adams adds another fermenter, they'll change that threshold again. That's how it always works, isn't it?
Definitely.
So speaking as somebody who... works on the journalism side of mergers and acquisitions, when a brewery sells out or sells, let's follow the BA definition. If it's sold over 25%, is it still a craft brewery?
That's a philosophical question.
Yeah, but does it also feed into the goodwill?
Oh, it does. Yeah. I think that's a very good. But at what point does the distribution of that brand compensate for the very small number of pissed off hipsters?
I can't believe I'm a hipster.
I know. Look at you, bless you. I'm sitting here in a linen jacket, so everyone else is a hipster apart from me.
No, you're looking good. We do have a video evidence. I was about to say on a podcast we can say what we want, but actually there is a video.
But to be very serious, the number of people who will be angry about a brewery being taken over is tiny compared to the number of
1%.
It's infinitesimal. If you've got a very, very successful brand that's independent, that's managed to get into supermarkets and that's managing to get decent distribution, you couldn't put it more perfectly. 99% of the people who continue to buy the product will have no idea who owns it, and they won't care, as long as the beer continues to taste reasonable and comes in at a price point that means they'll put it into their shopping trolley. No one can give a stuff. So I just don't think it figures, because once you've got that distribution network, once you've got that expertise, once you're plugged into, we can offer all of your beers plus your craft option, that compensates for the minor loss of goodwill that comes from being hyper cool. If you go from being hyper cool to being pretty cool to most people, that will mean more money.
And does it ever go wrong?
Does it ever go? I don't think that the craft beer space, certainly in the UK and definitely across the rest of Europe, is sufficiently mature to have seen one of these deals go wrong yet. However, it depends what you mean by go wrong, because I think that from the beer, let's be snobbish about it for a second, from the beer connoisseur's perspective, I don't think that the buyout of Goose Island has been a good one, right? Goose Island IPA, as was a great beer. Goose IPA, which I now see in a lot of crap pubs, isn't. Has it been a mistake from a business perspective? Now, I haven't looked at the figures, so I'm just talking off the top of my head, but the rollout and distribution would suggest to me no. And is Goose IPA, even if we don't think it's as good as it used to be, a better beer than some of those people in those crap bars I was mentioning than they would have had 5 years ago? Probably. So to what extent? It depends how you're measuring success.
Yeah, so in the book, The Barrel Aged Stout and Selling Out, they talk about... so they sold about half of the company, or a third of the company, just enough to not be a craft beer according to the BA. Quite early on. They were part of the Craft Brew Alliance, which is Kona and Red Hook and Widmer and a couple of other guys now. And they trundled along like that for 3 or 4 years. And then they sold the full stake. And shortly after they did that, they released 312, the wheat beer, nationally. And they weren't allowed to do it the way that they wanted. It completely flopped and got completely withdrawn back into Chicago again. So for me, that is... Lots of people that were part of that launch would have gone, this sale has gone wrong. But again, it feeds into the whole 1% thought it had gone wrong. Lots of people went for a week. They went, hey, holy shit, there's 312. Oh, it's gone. They didn't think about it. They just went back to their honkers or their the other one they had that wasn't great. It really does depend on your point of view as to what went wrong. I feel like probably Greg Hall, who was, the beer brains behind it, probably looked at that and was infuriated because he knew that his brew team had created
Nothing
beautiful
had gone
beer.
wrong for Greg Hall.
No, Greg Hall is now a multi-millionaire.
He was like
of course.
Scrooge McDuck, just sitting on a big pile of money. Being like,
What is it? What is it? Hans Gruber says in Die Hard: sitting on a beach, earning 30%. That's the negotiable bearer bonds. Yeah, I think again, your definition of it having gone wrong.
I think from the brewery's perspective,
The three of us sitting here in London questioning damn you, Goose, for the quality of your IPA.
I don't think I mean from a consumer's perspective, because so many consumers will say it's wrong and everyone's got their own opinion, but from the people that bought them out, has anyone gone like, shit, we shouldn't have done that? Or has anyone been thrown on the pile?
I guess, you look at... Heineken bought a stake in Brixton.
I was literally going to mention that. I don't see... Or the Carlsberg buyout of London Fields. You were talking about goodwill. You'll cut this out. You were talking about goodwill. What the hell goodwill was there in London Fields Brewery?
If you really liked cocaine,
you definitely have to cut that out. Actually, no. To be fair, like,
proven.
No, it's proven. It's in a court of law. You're actually fine. And I'm speaking as a professional journalist. You're all right.
Oh, I think it's got a yeast infection. Yeast infection.
One thing that sort of interests me at the moment and is very prevalent in the craft beer market is crowdfunding. Everyone's doing it, and I don't know, part of me thinks that if you're going to crowdfund, you want a payday. If I'm putting money into a company, I want a payday, so does that mean they're going to sell out? And how does it work around that?
Yeah, I have a lot of shares in Sainsbury's and the dividends are nothing. So I assume people that are crowdfunding are looking for that exit strategy. And I've seen pictures that have, we will sell out in 10 years. I won't say the breweries, but...
On their dividends, you'd need to live well for less.
Hey!
See what I did there?
Strong gag.
Yeah. There's more where that came from.
Well, you've got 5 minutes left, so you better pack them in.
Yeah, on crowdfunding, I think Yeah, I remember. I remember telling people that the original BrewDog equity for punks was ludicrous. I mean, it was something like 115 times their profits. They're projecting 3 times growth in the next year. Who the hell do these people think that? Well, of course, they achieved and more, all of those things. And anybody who invested in that first round
call yourself a pro.
I know, right? And that just goes to show that, you know, Warren Buffett, the famous investor, had a bet with a hedge fund guy that if he invested in really, really cheap index funds that just tracked the market, he would outperform the hedge funds. And the hedge fund guy said, no, we're paid millions of dollars to beat the market. I'm definitely... Anyway, suffice to say that the hedge fund guy lost and Warren Buffett won. Beating the market is really, really hard, and if you do, it's more often luck than judgment. But when we were looking at the original crowdfunding, and really BrewDog was kind of pioneer in this country at least for doing it, you were just benchmarking against average company multiples, and it looked ridiculous. What we have seen, though, is an explosion in craft beer volumes and the ability of the craft beer brands that get their branding right to scale up very quickly. And if you think about some of the breweries that have fallen by the wayside or that haven't ever really developed the scale that, even if their beer is good, that they might have done, but then you look at Cloudwater or Thornbridge or Beavertown, the way they've been able to scale up, and not just with quality beer, but with branding that really sings on a shelf. We've seen the ability for these players to get some scale. So I'm not going to say that the crowdfunding is all about exit. But it is interesting that we've had, you know, Camden did a crowdfunding and then sold to AB InBev in relatively short order, actually.
And it was a good return for people that got involved in the crowdfunding.
Terrific.
Yeah, I wish I had.
And you've done the crowdfunding. There have been the crowdfundings at BrewDog, and of course they've had the angel investor investment, and then TPG coming along with £1 billion valuation. So there's a bit of a sort of mini trend that once you do the crowdfunding, some big money will follow. And so in that sense, it seems clear that there is that eye on having a payday. But I think there are 2 models for the crowdfunding. I once contributed to a crowdfunding which didn't make its milestone to re-record the James Bond Moonraker soundtrack from 1979.
Justify.
To justify?
Yeah. No. Yeah.
To justify.
Can you justify it?
I thought you meant to Justin Timberlake doing Justify, which would have been amazing.
I thought it was like
That's
a statement.
mashup.
Justify. Yeah.
No, it's a very significant question. Why does it need re-recording?
Listen, the master tapes are not in good condition. Don't aim that at me.
If you don't justify well, this Treefontaine
To be fair,
corpse coming forward.
Oh, Jesus. See, I told you. Christ.
I'm glad we have a camera for that.
Well, I feel justified in saying don't aim it at me. But anyway, so what the hell were we talking about? I've had a heart attack here.
You were talking about a crowdfunding that you got involved in.
Yes. So, look, it's a great soundtrack. It's got some disco beats to it. It's very much of its time, and the original recording wasn't that great. Okay,
sure. Sorry, I didn't mean to imply that you were wrong.
There's
I just
no wrong
wondered
way
why.
to be a beer fan.
And then I popped a
You can
cork
be
at
a beer fan and like John Barry soundtracks. Okay.
Is that the guy that
he wrote that anyway?
Right, okay.
But the point is that that's very much one that was niche and for the love, right? And I think that if you invest in some crowdfunding, you don't necessarily expect a monetary return. It's like being a member of a club, and maybe you get 5% off at the tap room or whatever. And I think that would be enough for some people to feel part of the club, go along to a party once a year. I think for a lot of people, though, it is an investment, and for a lot of the breweries that are doing them, I mean, we've written, for example, about 5 Points, and Ed Mason was on the record as saying, well, we're getting this crowdfunding over the line, but in 18 months' time we would welcome an investment potentially from a private equity or potentially from a beer player.
So what you're saying is, if a brewery is crowdfunding, put your house on it because they're going to sell.
I think it's a fairly decent indicator. Yes, I mean, if I'm going to be just completely open, I think it is. Yeah.
So, do you think that the breweries that have done it are being fair? Are they being transparent enough? Because, like you're saying, lots of people do it out of passion, and they've done it out of passion.
They'll get paid, won't they? I don't think you can... Look, I would really caution anyone being naive, you know. It's not a business what we do. It is show business, right?
Yep.
And this is beer business.
Yeah.
And the business part means that you get to enjoy the... You know, if a brewery doesn't make a profit and you like the beer, bad news. You won't be having that beer in 6 months' time because the brewery won't exist.
And beer and passion, or business and passion, can go hand in hand. I mean, just because someone enjoys their job doesn't mean it's not a job. So you can run a business and be passionate about it.
Totally.
So.
And I think actually we're better placed than ever before as consumers, because for once, premiumisation, and maybe this won't last long, maybe this is a trend and it will go the way of all flesh, but at the moment, premiumisation is in lockstep with the quality of the product. It's not like the 80s and 90s where Stella was quote-unquote reassuringly expensive but basically a bit of a drab commodity product. These days, if you go to the craft section of any supermarket, there are better beers in that aisle than there would have been even 5 years ago. So, you know, yes, okay, the profit motive can be a bit depressing at the margins, but at the end of the day, there is, at the end of the day, what a cliche.
No, it's cool.
Sorry. But the point is that there is better beer and a greater variety of it than we've ever had. And the fact that it is profitable to distribute it and sell it is the reason we're able to enjoy, admittedly mostly in urban centres and not in your provincial towns, but in urban centres, why we're able to enjoy that variety, because it makes a profit for somebody. If it didn't, then nobody would be able to make a living from it.
Well, that's just, I mean, I don't think people are ever begrudging people making a profit. I think the reason that it's such an emotive subject is because you taking a profit, in theory, takes profit away from someone else. So
No. You see, that's a zero-sum game approach to economics, which I will not have.
Okay, go on.
Because that presupposes that the size of the pie is fixed.
Right.
And it doesn't... I'm not saying that it is fixed. I don't think it is. In economics, the pie is not fixed. If the size of the pie economically were fixed, then we couldn't support population growth. Now, there might be environmental reasons why we can't sustain a certain degree of population growth, but believe me, that's for a whole other podcast, right? The point is that the economy has grown with... It's one of the best arguments for immigration, because as you have more people, there are more businesses, there's more flow of money, that creates more investment, and you have a bigger pie, right? So nobody, I think, would have believed in 2006, when I think there were only 6 breweries in London, 2 of which were brew pubs, more or less.
Yeah, definitely.
Something like that you would be able to support 110. But we are supporting 100. Will they all last? I don't know, but we're never going to go back to having 6.
So as somebody who has quite a big overview of the market and the financials behind it, the pie isn't fixed, but currently the pie is shrinking.
The pie is shrinking overall, but the important thing is that within it, the craft pie is growing. Mm-hmm. And that's the thing. So if and I don't have the figures to hand, and you will be much more aware of them than I am, because I write about all sectors, and my journalists write about all sectors. So I'm a bit of a jack of all trades and master of none. But I'd say that, let's say craft, including cask and the rest of it, what is it, 10, 12% of the beer in this country?
In terms of cash sales, perhaps. In terms of volume, closer to 4 or 5.
Okay, but in cash terms, and that's the point, right? Because it's higher, and that's exactly the point. In volume terms, 4 or 5, but in cash terms, closer to 10. That's about right?
Yeah. Mm-hmm.
And that proves that it's a higher margin product. But that could grow to double in terms of volume, even within a shrinking overall. Like, I think as we see, especially youngsters drink less and less, and all the statistics show that that's the case. But they're drinking less, but they're drinking better. And I think that therefore they're not going to be wanting cheap slabs of commodity lager. They're going to be wanting, if they're going to have a drink, if they're going to put their precious gym hours on the line to have some alcohol,
they want to enjoy it.
They want to enjoy it, and they want to have an experience with it. And that will sound really wanky to some of the northern pub bloggers, naming no names, pub curmudgeon, and the likes.
Yeah.
But it'll sound wanky to a certain demographic, but actually It's not, because these people go to work, they want to meet their friends, they don't want to ruin their livers, they want to maybe have a couple of nights out a week where they drink some beer, and they don't want to drink any old shit.
So I guess to close the interview, this is a question for me and for you too, because obviously all these deals that are happening are quite long term. The breweries, even if it's just, like you say, rounding up mistakes in accountancy, they're looking for a long term return. That's why they're doing it. Or they're looking to stop someone else having that long-term return. What is the market going to look like in 10, 15 or 20 years' time? So we know a couple of things. We know that premiumisation is happening and it's real. We know that there are only 4 or 5 major players. They cannot buy the 6,000 breweries in America, the 2,000 breweries in the UK, the 800 breweries in Belgium. We know they can't buy all of those. So what is that market going to look like? If the pie is shrinking, is the pie going to be a much tastier pie? Or is it going to be a similarly tasty pie to now, but it's just that those beers are going to be slightly degraded versions of what was independent now?
This is, it's always tough to make a prediction 10 years out.
Just reminds you about the Brewdog prediction you made. So,
But I think in 10 years' time there will be fewer brewers than there are now. But 10 years ago, there were, 500 breweries in the UK? Something like that.
probably less, yeah.
And now there's, 1,800, getting close to 2,000?
There's over 2,000 if we're counting brew pubs and
Right.
weird little things.
So I think that will thin out. I think it will thin out for 2 reasons. I think we already discussed how some very small regional players that don't have access to their own tap room and perhaps aren't able to do small pack, because that's also a good way to keep your margins up. If you don't have the packaging clout, if you haven't got your canning facility or a bottler, I think you're really going to struggle. And if you don't have your own tap room, we were talking about crowdfunding earlier. Like Hop Stuff have got a great model. They raised just the best part of £1 million, but they're selling a lot of their beer direct through their own outlets. To the extent that their distribution, they're not distributed that much in London for a brewery of their size. I think that's quite impressive. But if you don't have that, then I think you're going to suffer. I think if you are focusing mostly on the cask market and you haven't got a really compelling story or a really destination quality beer, Harvey's will always be okay, right? But
Better than okay.
As long as that sweet, sweet diacetyl stays.
It's just beautiful. Such a beer.
Yeah, great beer.
But there are. I think those breweries will thin out, and the other reason that there will be fewer breweries is consolidation, which we've already talked about. But I do think that we're talking more about going from sort of 2,000 to 1,200 or 2,000 to 1,500. We're not talking about rolling all the way back. People welcome variety. People want that variety. They've got a taste for that variety. And even if we remain a niche, even if the 1% remains a niche, I think there still will be... That niche will grow, and it will be enough to sustain a large number of small businesses. And there'll always be twats like us who want to look for the new thing. And we will keep going and looking for that. What you might find is some breweries that have their lines for the supermarket but are doing lots of smaller releases in order to kind of feed that new, that thirst for the new. And you're already seeing that, of course. But yeah, I think we will see fewer breweries for sure. I think as well one of the big trends is the focus on quality. You were talking about the 110 breweries in London and the fact that not all of them are that great, or that there could perhaps only be as many as 20 that are making truly fantastic beer. One of the things that I've noticed even among really sort of beer geek types is I'm just beginning to see people go for something they know on a bar. It's going for something they know on a bar with 40 taps, but it's going for something they know rather than just defaulting to the new, because we are getting to the point now where the new is not necessarily good.
But you always do that anyway, even as a beer geek, I think. You search and you try and find new things, but you will always go back to the ones you trust. The Harvey's Best, Those beers are still good. You can drink them, and even the most discerning beer geek will always have their bread and butter. So those beers will always exist. And going back to what you were saying, Johnny, about what's going to happen in 10 years' time, more people will sell lots will close. But I think people will still be creating beer, and there will still be an independent beer market, and they'll probably be the innovators within that sector and probably taking off the innovation that big breweries can do. They'll maybe do that on a smaller scale and adapt it and make more creative beers. I mean, Belgium's a good country to look at. It's still innovating and still making very niche beer, and it was probably bought and sold more than any other country, considering its size.
But do you see perhaps another cycle coming? So Belgium, much like the UK with cask, which sort of hit a bottom in late 70s, maybe early 70s. In Belgium, they hit that bottom maybe a decade, 15 years later, and they're recovering from that. So lots of people, we're seeing as the importers of all of these beers, we're seeing this resurgence in small, adventurous, often hoppy or twisting traditional styles. We're seeing that come through now, but lots of people who are new to the market see Belgium as behind the times, which is kind of nuts.
When Duvel Mortgat bought Schoof, which was 10, 12 years ago? Maybe more. But when they bought that, I remember it was around about the time that Schoof issued the Double and Triple and IPA or whatever. Forgive me, that's not what it's called. But, it was a very New World hopped 9% triple. I remember thinking, wow, they've really smashed together some styles to do that. And the problem in the UK, which is specific to the UK, is the progressive beer duty. And the progressive beer duty, which is this tax increment, the tax relief increment,
yep.
It makes it hard for middle-sized microbreweries to merge and maintain their margins. So basically, if you're going to get bought out by a massive player, because the synergies for being two modestly sized breweries that come together are relatively small because you lose the tax relief.
Yeah. So for people at home that might not know,
sorry, this is terribly dark.
up to 5,000 hectolitres, there's a certain tax break, and then it's over 12, and then it's 60,000 hectolitres, I think, is the next thing. So if you get trapped in the middle of any of those, you'll see lots of breweries go from 5,000 to 12 very quickly, which Cloudwater tried to do and actually failed, and as a result made a small loss when they were projecting a profit. It's an incredibly tough ladder to climb,
and it is a barrier to consolidation. Which, if we've got a number of breweries that are facing, maybe you've got a number of breweries that have really good distribution among the pubs in their area, for example. Maybe there could be like some distribution synergy in 3 or 4 of these regional breweries that are within driving distance of each other merging. But if they did so, they might go above one of these thresholds, which then reduces their profitability. So the way that it's structured at the moment tends to kind of prejudice against those kind of mid-sized brewery. I say mid-size in our world, mid-size, not.
Yep.
No, but it kind of prejudices against those microbrewery tie-ups, and I think that complicates the consolidation picture in the UK a little bit.
Well, so to sum up, right? You've got a beer nerd who's stuck in the bubble. His favourite brewery has just sold out. What do you say? A, to console, but also to kind of shake that person and get them to realise that it's not the end of the world. One sentence. What are you going to say?
We all work for the man.
Bleak. Rob?
I'm not the expert, so
You're dodging the question.
Seriously, I was channeling Jack Black from School of Rock there. No, seriously. Even if we end up in a situation where we have fewer breweries than we do now, there'll always be churn. There'll always be something new. There will always be a passionate ex-Marine who is tired of life and just wants to brew beer and does something crazy in their garage and
wants to be good.
And it happens to be good. Or maybe it's not, but the adventure of going and finding it, The next, London, I remember going to the Colonel when it just opened and having the beer served off pallets, and it seemed so esoteric. And then it all got very professionalised. Now Not Nettle Market, what's it called?
Druid Street Market?
Yeah, Druid Street. Now that's all very professionalised. They've got glass fronts on some of these railway arches.
Fucking sellouts.
I know, right? Glass. But the point is that there'll always be something like that. Then the focus became Manchester. Sheffield, as even since the late 90s, has been an incubator of some fantastic breweries. Maybe it'll be Sheffield next, or maybe we'll see even more growth in Leeds, or maybe it'll be Maidstone. Who knows? But there'll be somewhere where it won't be Maidstone. But
that's where the Cave Warehouse is. We'd really appreciate if people located near us. That'd be great.
It's not going to be Maidstone. But thankfully for your rental costs, it won't be Maidstone. But but the point is that there will always be the churn. Even if we only have 1,000 breweries, there'll always be that churn around the 800 to 1,000, the ones that close, the ones that open. Some of those will be good. Some of them will build amazing brands. Some of them will then later sell out. But there's something in us that keeps looking for that new opportunity, and there'll always be something new.
Yeah, I mean, even when Camden sold, I was kind of gutted because I used to live around the corner from Camden, and I want to drink independent whenever I possibly can. I'm not against drinking macro, and I had a Peroni last year at Centre Parks, so I'm open,
There's a whole series of things wrong with that equation, but do they still have the dome?
Well, it depends which one you go to. The one I went to, there's the dome, there's the flumes. Mate, it's magic for the kids and for you.
This podcast was sponsored by Centre Parks and Peroni.
But what I basically thought was, well, right, I can enjoy Camden Hells probably in more places than I would have, and at the same time, I'm still lucky enough to be able to literally walk to 10 other breweries that produce magic stuff, and at the end of the day, I fully believe that the market will survive any of these sellouts.
I mean, if you think about like some of the nadir points, if you think about the 80s, for example, even in the 80s you had, Exmoor Gold come out, which, I know it's not the most exciting beer now, but imagine when it came out, how exciting that would have been. Imagine when Hotback Summer Lightning first hit in, when was it, 1987? Mm-hmm. Imagine how exciting and fresh and different that would have seemed. Then Crouch Vale emerging in the early 90s.
And Dark Star, and then St Austell came out with Tribute, and then Proper
And
Job,
Tribute's still well kept. A very interesting beer. Yeah.
It's all Fuggles, but it's bloody delicious.
It's not all Fuggles.
It's 80% Fuggles.
But there's a little bit of Challenger in there, right?
Yeah. I mean, I'm not dismissing Fuggles. It's a delicious beer, and there will always be, now more than ever, there's still never a better time to be a beer drinker.
Oh,
it's
and
a cliche.
The amount of experimentation that's taking place with English hops at the moment, the
Jesters and that kind of stuff coming out.
And the number 215 and all that sort of stuff. There's so much that's going on. And, of course, there's whole new business models as well. I mean, absolutely declaring an interest because I'm a mate of the brewer, but there's a brewery up in Forest Gate, pretty decent, where his thing is 15p of every beer goes to Pump Aid, the water charity. And I think social enterprise is going to be a big part of breweries going forward, because I think that there are social enterprise grants, there's social enterprise funding, particularly the government funding for these kind of breweries, and I think that maybe not-for-profits or breweries that are generating for local causes or whatever, that's definitely a business model that could take off as well.
So to sum up, I suppose it's going to continue to happen. More people are going to sell. They're going to do it for financial purposes. They're going to do it to expand. They're going to do it to grow. But people are still going to continue to open breweries and innovate. It may shrink because it will be hard to keep up this rate, but we're sort of in it for the long haul, you reckon?
I think that we're past the Rubicon. The Rubicon has long since been, in 2006 there were 6 breweries in London. Now there are, 110, 6 or 7 back in 2006. The idea that could row back in some way to 6 breweries, that they're all going to be happy just drinking, this is a great pub because it's got Spitfire and Brains SA, which was genuinely a thing you might say in, say, 1998. The idea that we're going to go back to that is for the birds. The flavour genie is out of the thing.
Out of the teku
bottle.
Yeah.
Although genies aren't in bottles, they're in lamps, aren't they? But
there's some dude on Instagram probably putting his New England.
Someone should tell Christina Aguilera that genies are in lamps, not bottles.
Well, on that bombshell... No, I'm not going to say that. Thank you so much for joining us. Thank you for the insights.
Thank you very much. And to play out Christina Aguilera, genie in a lamp.
So I think that final conversation that we had was quite interesting, like admitting or realising that not every single brewery is going to sell out. We're probably never going to go back to where we were, say, 30 years ago, where A, there weren't many breweries left, and B, any breweries that got bought out were just sort of swallowed and the brand was taken and not really the recipes. We're never going to go back there. So what do these sellouts mean? If craft beer is going to survive, what do these sellouts mean for the industry?
I think there's sort of going to be twofold. Breweries will continue to open, breweries will continue to close, and then breweries will sell. I don't completely agree with John saying that, that every brewery's going to sell if they are given the option. There are people out there that are doing it for different reasons, or just want to be completely in control and don't want to get it to a size maybe that they need that investment. But I do agree that there's going to be a lot more. And it's going to be a very interesting few years in the UK scene. It's been happening in America for quite a long time. There's been some really unusual buyouts like Wicked Weed and people like that you just would not have expected. All the ones so far in the UK have been fairly, maybe not commercialised breweries, but they've been of a size and a slight commercial nature that you can get behind it. But if they're willing to buy Wicked Weed over there, who are they willing to buy over here?
Yeah, I mean, Wicked Weed have their clean side, which they probably expect will do some volume, but yeah, the idea of them buying into such a huge, wild project is pretty unusual, and actually, to me, is a little bit more scary than somebody buying into a very sort of clean, volume-based brewery, because that really hits home for the smaller guys that probably aren't as financially secure. Them buying Wicked Weed could have a serious effect. If they flooded Texas with Wicked Weed beer, what would that potentially mean for Jester King? So I think that's an interesting purchase, and I worry that might be quite a cynical move on their part. But when everyone was so upset about the Beavertown sale, was it because they're going to miss Beavertown, or was it because they're actually worried about the other independent breweries? I think it's because they feel like they'll miss Beavertown if their morals mean they can't drink it anymore.
Definitely. I mean, Beavertown it differed from, I suppose, Meantime in Camden, because they were so commercial, and they were always sort of built to sell in that way. They were making lagers and very easy drinking session pales, and
probably had a holding company if we'd known to look.
Oh, damn it. But Beavertown was just different. Everyone sort of felt like they discovered it. It was edgier, it was cooler, it was making far more interesting beers than those guys ever really did. And it just felt so much more underground. And I think losing that's why people sort of felt that it was theirs and they owned a bit of it. And then now they don't, and Heineken do. But as John was saying, that these breweries need investment, and breweries are expensive, and it's not easy to make money in brewing. There's a lot of wastage. People don't buy it for as much as, say, wine. Nope. So they need a lot of money to get to that next stage.
Yeah, I think it's that a lot of people sort of say, well, couldn't they just save the cash? The issue is that cash flow in beer is incredibly hard to come by because the margins are so small. You're never going to have those great piles of cash hanging around. So you're always going to have to borrow to grow, even if your turnover is huge. Which, I mean, in the past, I've used Sierra Nevada going, you don't need to sell out, look at what Sierra Nevada have achieved. But I wonder whether that time is kind of past now. They're in a much less competitive market, and probably the equipment was maybe a little bit easier and cheaper and quicker to come by at the time. I don't know, but equally I still kind of feel like, well, did Beavertown need to do what they did, or did Four Pure need to do what they did when you look at somebody like Sierra and they're managing it?
Yes, but on the flip side of that, let's think about breweries in America that are of Sierra's size, like for likes, and how many of them are independent. There's not many, like Anitas is now 100%, Goose Island is 100%, all those big boys are sold out.
I mean, all you've got is like the Stones and the Sam Adams who have gone down the private equity route, which we didn't get too much into in the podcast. But the important thing to point out about private equity is that you're not necessarily independent. You're still beholden to a business and beholden to all of their shareholders as well as your shareholders. And also, private equity, their purpose in life is to make money off of that investment. So Heineken probably won't sell on Beavertown, but that private equity investment will sell off BrewDog, will sell off Stone. And as far as I know, BrewDog and Stone have no control over who they sell it to.
That is one really interesting point that John touched on, and actually, I mean, that is nearly a whole different podcast in itself, but that private equity buyout, BrewDog have made a very good job, as always, of romanticising it and saying, we didn't sell to a major brewery, it's private equity, but private equity's sole purpose is to invest money and turn that money into more money.
It's money for nothing. It's exactly the fat cats that they were dropping cats on a couple of years ago,
and they're going to want a return. They haven't given them all that money just to be nice. And they usually put a lot stricter returns in. There'll be these fat cats who are saying, we need X amount of growth in 2 years, because they'll want to see return faster. I suppose a brewery might not. None of these big breweries will have seen growth like any of these small independent breweries who are absolutely smashing it. So it would be kind of counterproductive to come in and try and change it all up, because they're still growing 30%, 40% year on year, and no big breweries doing that I know of.
No, I mean, I think it's already been shown that once you get to a certain size, and it's the size at which you might start to look to sell, either for extra investment or to cash in, there's a bit of a volume ceiling. So Sierra Nevada are struggling for growth with their core brands. Lagunitas, it's just been announced that they're going to reduce the ABV of their IPA in this country, in the UK, to 5.5, which to me is chasing volume, maybe in their own estate. Getting listings at 6.2 is tricky because of the amount of duty and the amount of people that will drink that by the pint.
I think that is one of the biggest reasons why people don't like people selling out, because they say nothing will change. And
exactly, yeah.
I mean, how long have Lagunitas been making IPA? At 6.2%.
Since early 2000s, isn't it? That's maybe 90s.
And all of a sudden, 2 years after the buyout, they've come in and said, look, we're going to sell way more beer if we liquor it back a little bit and make it 5.5%.
And it's their flagship brand, and they've gone, you know what, let's whack 20% off the ABV, change the recipe, and we'll sell more. So, here's what everyone feared. I mean, I think the only thing we can really conclude is that we'll know in 5 to 10 years' time. Like, guessing this kind of stuff is incredibly hard. But on the flip side, the one thing I do know is that short of some disaster, Colonel is still going to be there producing absolutely astonishing beer. And you could say the same for maybe 100 others in the UK that have grown to a size, love what they do, love what they produce, and want to keep doing it as long as they possibly can.
Yeah, I mean, I love that. And people that do things sheerly out of a labour of love, I mean, it's completely commendable. But also, some of the breweries that have sold, they still love it. They wanted something different for their brewery. They wanted it to be everywhere, and maybe didn't want it to sit on 30,000 hectares a year. But yeah, complete props to people like Evan who have they were first to the party back in 2009, I think it was, creating this beer, which really changed it for everyone. You can look at some other breweries that were maybe about a bit before, but they really changed the game. As far as flavour, experimentation, they didn't care about price. They needed to make it work for them, but when I first moved to London and was working at the Dean Swift, on my first day there was an IPA on in 2012 at £7.50, and I couldn't get over it. I'd just come from Northern Ireland, where the most expensive pint was probably £3.70, and this pint was £7.50, and I sort of thought, if you ever catch me drinking a £7.50 pint, you can shoot me. And then sort of fast forward a year, and I'm like, bang, give us two. But they set the bar. They could have grown far faster than a lot of other breweries because they've had the respect and they've had the quality of beer, but it's not what they wanted to do, so they didn't do it, and that is very commendable. But I don't think we can judge People just want to do it differently because each to your own, it's their business, and they want different things for the business.
Yeah, I agree. Like when people sell out, the two things I say, partly post John West, is A, they can't buy everyone. There will be independent choices for you, and B, that even if you're no longer drinking that can of amazing beer, independent beer, someone somewhere else is discovering that beer as a result of that, and that can only be a good thing. So swings and roundabouts.
So yeah, the answer is, I suppose, there's no right and wrong, is what I got out of it, really. It really filled in a lot of blanks. It was very easy just to sit back and get annoyed because people sold out, but it's sort of without understanding. And different strokes for different folks, I suppose, is the outcome of it all.
And making sure that those companies who do sell, so long as they continue to act responsibly and fairly, then there won't be an issue. The question is whether they will do that. And that's really why, that's the only reason you can be annoyed, if somebody starts affecting the businesses of the small independent people, if they start acting irresponsibly. So we'll just have to wait and see if they do.
Exactly.
Yeah.
You know, it's no secret that people like InBev do disrupt markets and go after the little guy. But as long as those breweries that have sold can hold on to their morals and continue to make good beer, get it out there more and grow craft beer as a category. I think that's what we need to think about, is the outside the craft beer bubble and just craft beer in general, we need to grow that.
So guys, that is the end of our first full episode of The Bubble. I hope you enjoyed it. The next edition comes out in August, and it is what we thought was going to be a really positive pro-beer episode actually turned out into us tearing apart one of the main tenets of beer marketing, which is beer and food. So we're interviewing MasterChef winner, former Houston Tap manager, and now food celebrity and restaurateur Tim Anderson about the benefits of matching beer and food and the commercial downfalls of matching beer and food. And it's a really interesting conversation with Tim.
So until next time.
What's he got this time? I thought you'd have a wicked outro. No?
We probably do need it better.
You definitely do.
I love that stuff. Been drinking it for years. Drinking it for years. Drinking it for years. Drinking it for years. You know, they recently decided to add more hops to it. Hops to it. You know, they recently decided to add more hops to it. Hops to it. Chica, yeah, fica, outside.